Now, for financial regulation at the IMF, the way we see it is really you try to address the vulnerabilities and the risks to make sure that financial stability is not undermined, to make sure that efficiency is improved, and to make sure that the consumer is protected, right? All those are important, and it's important to also assess the risk in terms of how systemic it is, how much it will affect the whole economy. Now, trust is important, and there's different ways where you can look at trust, and this is where regulation of market participants can help. You have legal certainty, sanctity of contracts and property, long-term relationship if you know your client, payment system if you have already a public track record, and therefore regulation can come in to try to fix it. Now, here are the regulatory challenges faced by everybody. The new regulation, and this is really an evolving field. Everybody is thinking about the regulations. Somebody talked to me earlier about how do I establish trust? How do I go with, and with that not stifling my activity? Well, I think maybe some of the regulations now, instead of going towards focusing on activities, should be focused, instead of being focused on entities, focused on activities. It's no longer the whole bank, a particular sector. There's all of these algorithmic governance that is already happening in the system. One has to be careful to make sure that this does not lead to some more financial risk and that the algorithms are themselves governed. Then we have a risk about data. So now we went from a centralized ledger system to a more decentralized, the DTL, the blockchain, etc. But now you have that information in a whole network. Before we had these privacy laws and contracts. Now how do you do that in a network? And there's always this question about ownership that comes in. Bitcoin, what is it? Is it at the end, can you use it for final tender? Can we have, is that something that which you can really settle transaction? Is there a risk? Now, there's been some work ongoing on that, and most regulatory work that has done is what we put in regulatory sandboxes. They haven't done it for the whole system, but they have done it on a pilot thing for a few activities to try to see how it works, and for a certain group of customers. And the importance here is to try the balance between promoting innovation and preserving financial stability. Most jurisdictions, even when they do these regulatory sandboxes, they don't exclude regulations regarding AML, CFT. That's the key one. And actually, if you look at the international standard setting bodies, the area where CFT, FATF has issued standards is in this area, even for fintech. And there's, of course, some safeguards to try to safeguard the consumer. Now, there is also the use of emerging technologies to try to self-regulate. So you have RegTech, you have these automated manual processes with artificial intelligence, you can have share and store data with cloud, you can enhance security with cryptography, you identify suspicion transaction with biometrics and big data, and you can facilitate your interactions with the banks with APIs. Now, one last slide on my side, because we're the International Monetary Fund, I have to talk about international a bit more. So in terms of the regulatory framework across countries need to be harmonized. That's not the case. There's a big discussion going now in Davos, a lot of the regulators getting together, trying to see what could be some of the standards. There's some international standard setting bodies like IOSCO, FSB, etc., that have already started looking at this issue carefully. And efforts are also underway in bilaterally between different countries. The IMF is getting more and more involved in this and looking at the risks on this with regards to financial system stability and global financial stability, including more recently with Bitcoin and other virtual currencies.